Another reversal pattern that I want to talk about is the double bottom. We talked about the head and shoulders bottom, we talked about the saucer bottom, and these take a long time to develop. In fact, the longer they take, the more powerful that resolution. The double bottom, however, is quick and efficient. So I'm going to show you guys a good example. We're looking at crude oil futures in the first quarter of 2016. We have a prior downtrend, because again, we need something to bottom. So that's certainly the prerequisite. We have a pivot low, momentum put in a new low, very characteristic of a downtrend, nothing abnormal, everything is just classic. We get a counter trend rally within an ongoing downtrend, very normal. And now we get a retest of that former support. The best double bottoms are when that second bottom slightly falls below the previous low. If this was a double top, we would want that second top to be slightly above the previous high. Those are the best ones. So notice how on that second low in crude oil, we put in a lower low technically, but notice how momentum got nowhere near the previous lows. Lower lows in price, double bottom, bullish momentum divergence. This is along all day. From a risk management standpoint, we only want to be long crude oil if we are above the prior low. If this was a double top, we would only want to be short below the prior high.